Welcome back, investors. Today I'm going to be discussing some analysis of the semiconductor industry, which I did as I wanted to add another company within this sector to my portfolio. I looked at 12 companies over 14 metric, ranked them, created a league table, and in the end, I was blown away by some of the amazing companies within this sector. Now, the semiconductor space is booming currently with a growing focus on AI, which requires powerful computing chips. The companies I will be discussing fall under some aspect of this value chain. These are the 12 companies I will be assessing and ranking. A disclaimer is that I already own Nvidia and Broadcom within my portfolio, which I have done very well on. These are the metrics that the list will be ranked on. So 1 year growth, PE ratio, revenue, net income, earnings per share, free cash flow, net profit margin, and over a 5-year period, return on equity, and over a 5-year period, analyst rating, cash for the most recent quarter, and debt for the most recent quarter. So a brief overview of the semiconductor market. As you can see, Nvidia leads the way by a huge margin, and is actually bigger than all of the other 11 combined, which is even crazier when 5 of the others are considered as mega cap stock, which equates to being bigger than 200 billion in market cap. Here is the visual on that Nvidia domination. TSM and Broadcom are the only other two above 10%. Looking at recent momentum within the market, the segment is booming. Barring Intel and Texas Instruments, all of the companies that outperformed the return from the S&P 500 benchmark for the last 12 months, which stands at 28%. 2 of the stocks were baggers. No, not that kind of bag, or even that kind of bag. Although this one, you would need that kind of return to purchase. Guess how much this cost? No, a bagger is a stock that returned 100% or more. And another 2, Nvidia and SMCI, were double baggers. Now, according to this Deloitte report, the trend of performance is set to continue within this sector. It says 2024 is now predicted to be global sales of $588 billion. Not only would that be 13% better than 2023, but it's 2.5% higher than 2022's record industry revenue of $574 billion. So it looks like the upturn in this sector is set to continue. So onto our ranking system. So 12 points will be for the highest score within each segment, going down by a point the further down the list the company ranked. So the maximum you can score is 12 and the minimum is 1. So in terms of market cap, Nvidia blows everyone away, with TSM and Broadcom making the top 3. PE ratio. The stocks within this sector are fast moving and high growth, especially in the current climate. So the PE ratios are naturally higher, so we have to take this into account. Taking out ARM and AMD, which would heavily skew the average is 41.65 for the remaining companies. Now this is quite high, where industry average is between 15 and 20 for a reasonable PE, and usually one with 25 higher are considered expensive. But as I mentioned, within this sector is generally quite high. So in terms of AMD and ARM, look how expensive they are, 233 and 531 respectively. Unless they perform ridiculously in the other metrics, they are automatically a no-go for me. Going on to net income, barring Micron, all of the companies are profitable in the last 12 months with a minimum of 300 million in net income. Nvidia tops the way with almost 30 billion in net income, but a big shout out to TSM, which is only 2.7 billion away with a much smaller market cap. 1 year growth, we have discussed this metric already, but this is it in the table version of those stats. Big shout out to SMCI, which has had a huge amount of growth for the last year and scores top within this rank. Nvidia performing superbly, up over 200% and gets 11, and ARM with 136% growth and scores 10 points within this round. Onto overall revenue, and I was surprised to see that a company with a market cap of all the others combined is not top of the list. A big shout out to TSM, this Taiwanese powerhouse of a manufacturer, which came in at top. Intel coming in at number 3 is really good, but as you will see, the profitability within this business is not there. This once beacon of the chip industry is struggling badly. Some recent US government aid will help things, but overall, very sluggish performance. Earnings per share next on the list. And my Broadcom holding is top of the list, coming in at a huge $7 above its nearest competitor in ASML. Shout out to KLA, coming in at third and competing with some of these other powerhouses with a much smaller market cap. Free cash flow, a very important metric, and Nvidia comes back into the mix in top spot with its huge margins. This is a cash generating monster, almost 4 times as much as its nearest competitor in Broadcom. Net profit margin. Look at some of these numbers. You can see why this industry is booming. 7 companies out of the 12 on a net profit margin over 20%, with Nvidia with a staggering 53.4% margin. A shout out to KLA again, which is competing with some of these huge companies on the net profit stakes. The next table is still net profit margin, but over a 5-year period to see which of these companies are consistently making good profit margin. As you can see, 8 companies have an average net profit margin of 20% plus. TSM with the strongest recent history with a very consistent average of just under 40%. And KLA showing wasn't a fluke with a top 4 performance over a 5-year period. Texas Instruments also performing really well on this metric too. Return on equity is the next one. Basically, this is how effective management has been on returns from shareholder equity. A return of 15 to 20% is considered good for a company. 8 of these companies go above this number. Nvidia with a ridiculous 115%. Again, KLA with a 90.35% ROE. This company is starting to catch my eye in these rankings, to be honest. Onto the 5-year performance of this metric. KLA knocking it out of the park and has kept a 90% ROE for a 5-year average. That is spectacular performance. Over the 5-year period, a lot of these companies are performing on a more normal basis, which solidifies that we are on a boom in this sector recently. Cash on hand for the most recent quarter, a hugely powerful asset for any business. It allows a company to do many things to improve shareholder return, strategy, and profitability. TSM leading the way on this one with almost 60 billion in cash. Nvidia second with just over 30 billion, and Intel with over 20 billion in cash means there is some hope for this struggling former star performer. Healthy cash balance for a few others means management have many options available to them within this sector. Debt, the first metric on the list where lower is better. Without delving too deep and looking at variables such as what rates of debt is secured at, how long it has before it needs to be paid, etc., we can see a few companies with some big debt on their balance sheet. A special mention goes to Intel with over 50 billion in debt. Yikes. TSM and Broadcom with some large numbers too, but again, debt is not always a bad thing, and in the recent past, debt has been comparatively cheap for these companies, and that might be a reason why some of these companies have loaded up on it. Getting close to the end now, and if you made it this far and you see value in this video, please like, comment, and subscribe. What metrics would you have added? What metrics wouldn't you? It really helps grow the channel, and it also motivates me to continue making these videos. So, analyst ratings. The second metric where lower is better. The number on the extreme right is how many analysts covered the particular company. 5 companies come in at strong buys, with 5 more as buys. The analysts like TSM the most. AMD featuring quite highly on this list, suggesting that there is some momentum behind this stock, but it's not scoring too highly on this exercise overall, which you will see in the end. Special shout out to Micron, MU, which is the only company on this list which produces memory, which is notoriously a cyclical subsector. A few reports suggest that it will be a good year for Micron as the demand for memory increases, especially high bandwidth memory, which is used by Nvidia, for example. And here are the final results. The domination of Nvidia in the stock market in general is reflected in its score here and is a clear winner within our rankings. TSM in second, by a similar distance from first to second, to a cluster of companies in third to sixth. AMD is one which is lower than I would have expected if you asked me to guess before we started this exercise as to where it would finish. Intel's sluggish performance in the form of the only negative growth stock for the last year within this sector is reflected with its 10th place position in the table. So my goal was to add another position to my current semiconductor/AI holding within my portfolio. which are currently Nvidia and Broadcom, which, as you can see, I have already done very well on. But after having seen some of the profitability of the companies within this sector, I've decided to add more than one. Does this make my portfolio a bit tech heavy? Yes, possibly. But do these companies have solid fundamentals with a room and track record to continue growing? I think so. So I've decided to put my money where my mouth is and added TSM and ASML to the portfolio. That gives me exposure to top 4 out of 5 in my overall league table. I added £978 in TSM after selling my IBM position within my invest account for a gain of £298.82. I also added £500 to ASML. Now this one will be added to my Pi, which I will be adding to every month. Some of you currently follow my Pi, so that's just a warning that there will be some changes within my Pi. Now, after having done the research, one particular company leapt out at me, and that was KLA. Its performance within the net profit margin, return on equity and EPS segments were very good for a company its size. As you can see, it came out 4th in net profit margin, 2nd and 1st overall in the 5-year average for return on equity, which is really good against these absolute other powerhouses of companies. Earnings per share finished 3rd, and free cash flow finished 5th. So I couldn't resist this company, so I've added £500 to this holding too, and it will also be added to my long-term Pi. The reason why I'm not adding TSM to my Pi is you cannot add TSM onto an ISA. The UK government doesn't recognize Taiwanese companies to be allowed to be put into an ISA, so that one it will be in my invest account, and I will add to that portion over there. So there you have it. That was my analysis of the semiconductor industry. I hope you found it useful. I certainly did. I thought what I found out about some of the companies was really impressive, and you saw I backed what my research showed me, and I added to 3 positions. Hopefully they do well. Follow my journey to see how they do, because I will be showcasing that. And again, please like, comment, and more importantly, subscribe. I really love watching the subscriber count grow. Here's another video that you might find useful over here, and I look forward to seeing you on another video.